Hi everybody. Welcome back to Venture Capital TV from La Token. My name is Sunny Mohanty. I'm the host and moderator of the session today, and we're going to discuss about the backgrounds of startups that investors are looking to invest into. So yes, let's have a quick round of intro of the speakers of the panel today. Welcoming. Hi, ladies. So we have a ladies group today. Seems like. How are you, Dr. Moraine and Vandana? How is it going?
I'm rocking.
Very well. Glad to be with you once more.
Perfect. So it seems like it's just us three today. It's okay. Absolutely fine. No issues. Let's start with a quick round of intro. Vandana, let's start with you.
Yeah, first of all, thank you for having me here, Sunny. It's a great pleasure to be on your shows. And I really love Latukan TV because it connects people globally. And these platforms globally helps me also with lot of insights from our esteemed panels like Dr. Marin herself. Coming to a brief intro about myself, I had my own family office in Singapore and Jakarta. I worked as an investment banker and advisor to family offices and angel investors in Jakarta, Indonesia, helping startups from a diverse background from fintech, B2B tech, all the way to consumer startups. I was raising funds for them and providing them with a range of services, just as Convanto does today. And after 15 years of staying in Singapore and Jakarta, I came back to India. I did investments for a bit and then returned to advisory. That is when Convanto was founded. Today, Convanto is one of the most well known boutique investment banks in India, led by a female founder. Today, I'm also a venture advisor with Loyal VC, the NCR led Canadian VC fund, having a core portfolio of 160 investments in more than 35 countries. I'm also a partner with GST Venture Studios, a Silicon Valley based venture builder. Over the years, I've arranged funding for startups and growth stage companies in diverse sectors like edtech, fintech, consumer, B2C and B2B, agri-tech, health tech, food tech, disruptive and deep tech, as well as non-tech sectors. I would recommend all of you to have a look at my website for the wonderful testimonials written by my clients. This month, I'm selected as the top 10 women leaders in wealth management 2021. Apart from this, my brand Convanto is selected as the top 10 brand among women entrepreneurs this month itself. And my expert opinion is often sought in business news channels and publications like VCTV and Business World. And I've participated in 160 talks all over the world. They can be seen on YouTube and VCTV streaming sites. I'm connected with 300 plus investors globally. We are sector agnostic and typically we do a $1 million to $25 million. And thank you once again for having me here.
Thank you, Vandana. Thanks a lot for your introduction. Next, we have Dr. Moraine. Hi, Dr. Moraine. How are you today?
Very well. Happy to be with you today. Important topic from my point of view. My name is Marin. I'm living in Singapore, originally from Germany. Have lived in France and US before too. I had my career in aviation, automotive electronics, and investment banking. I'm currently spearheading as CEO our family office, Venture Engine, and Schweizer's venture capital arm here in Singapore. During 172 years, we as Schweizer company have building numerous companies, listed two of them at the German and Singapore Stock Exchange. In the last 4 years, we've been investing into digital ecosystem platforms here in Southeast Asia. A total of 34 portfolio companies belong to the digital arm. We are now looking into advanced manufacturing and enterprise AI additionally. So I'm happy to share my thoughts on how you can present yourself to investors, to investment committees, and avoid certain mistakes that can happen accidentally very often.
Great. Thank you so much for that introduction. Sorry, let me just put yourself in mute. And welcome back again. So, as I was discussing with both of you before we went live, like, this topic, what backgrounds are investors looking for? We would like to know from you, each of you, what you think about this topic. What exactly does this mean to you? Vandana, let's start with you because obviously we need some clarity on this topic.
So, since I've been an investor before and understand this space very well, what typically, the priority of investors is three things. Once they do look at the background of the, startup founder, what drive the startup founder has, and what is the kind of team that they represent, whether it's a complementary team or not a complementary team really matters. Whether they have a CFO in their team, they have a CTO, they have a particular person in their marketing team, in their operations team, and of course what is consists of the founder's background. Like we had I will discuss a used case over here. We had this particular deal which belonged to a very big group, a 500 crore group, which had already 2 3 companies running, and then they came up with this cloud based company, that was at MVP stage. And because the founder's background was so strong, it got funded very easily. So I think all these factors are what investors do look at. When typically we pick up a deal, we do our ref checks, especially, the simplest way is to check LinkedIn profiles are in order or no, whether the company has a website or no. Not only that, sometimes Google has a lot of information about all founders. Like today, if you Google me, you'll find out a lot of information about me as well. So similarly, you can find out information about anyone on Google. It's very easily accessible. Apart from this, we have people all over the world whom we can just call and find out, look, this deal has come from your place. Could you just find out more about the deal? So when we pick up deals, these are certain factors we look at. Now, as investors, when the term sheet is issued, there is a very, very thorough due diligence process which the fund goes through before they put the funds into the founder's account. Now, we provide that list to the startups way in advance, which saves them a 2 weeks time of compiling those documents the moment they receive the term sheet. So I think during that due diligence time, if the company fails, then of course the fund will not hit their account. So there are 2 times that a company does go through due diligence processes. So it's very, very important part to check the background of investors. Just like when people will pick up me as an investment banker, they will check my background. Just as we do check investors background also, whether where they come from, whether it's a proper fund, whether how much work they have done, what are the investments that they have made. So there's a whole lot of thing that goes behind the word background. So
Absolutely. Totally agree. I mean, that's what we were discussing before, and Dr. Moraine also suggested. It's just how do you do the background checks
yeah,
before you invest into this startups. Also, startups on their side, they also have to do that due diligence before they bring in these investors into their company. So, Dr. Moraine, again, I just want to, as opening remarks, I would like to take your thoughts. What do you think about this topic?
I think there are different ways to look at it. One is the stage gate deal flow process. When you pitch your company, you are part of the long list. Then we take selected companies to the short list. Then we take them into personal negotiations. Then there's going to be a term sheet, which opens the due diligence process. And then there's the closing phase. So that's pretty much standard for most VCs and family offices and CVCs too. Nothing special about that. But what Vandana already mentioned, I want to emphasize that be ready in time. We are seeing many startups who are struggling during the due diligence stage because all the data they need to compile is somewhere, and there's just not enough time to build a proper virtual data room for the investors. And to your question, Sunny, regarding background checks, you need to be aware of that we spend a lot of time on checking backgrounds at the early stage, at the beginning. So in the long list stage, that's done with technology. We have web crawlers who are collecting data, who are aggregating them for us, who are automatically more and more based on AI finding inconsistency. So my recommendation for all of you startups is have one pitch ready. I don't want to say that your pitch cannot pivot in the course of your startup, but get one pitch ready, a couple of key messages, and tell them to the community, whoever stakeholders you are talking to. That's probably one of the biggest traps for startups, is that they don't tell the same story. And that generally faces up very quickly. And the more talks you have, the more startups you had the opportunity to talk to, I would say both sides get a very good experience and a kind of well-established gut feeling if something is not really wrong. And if that feeling pops up, then we go to the facts and do additional checks. So it's all about background checks. You are muted, Sunny.
Okay, I think thank you so much because I think our frequency sort of flashing, so I had to put myself on mute. So, thank you so much, both of you, for explaining how do you visualize this topic. I mean, it's all about background checks, as Dr. Moraine said, and Vandana rightly started with what kind of checks are done. It's all about background checks. So today we're discussing, before you evaluate a startup, I mean, evaluations obviously in terms of monetary evaluations, how much they're going to get funding from the investors, but background checks, knowing the founders, as much the founders knowing the investors, is very, very important. What kind of, my next question obviously is very much in line to this background checks. What kind of qualities, or what kind of attributes, or what kind of background in terms of educational work experience do you actually look into a founder before you say, okay, this solution is great. I think I can spend my dollars here. However, this person is not the right fit for me. Sometimes you might be having these kind of issues where you have a great product, but the founding team is not that great. So in terms of the founding team members, what kind of qualities do you look into, especially Vandana? Let's just start with you. What kind of qualities do you look at?
See, I would definitely look for somebody who's authentic, also who's humble in nature, because humble doesn't mean submissive. Now, the term humble is always mixed as being submissive, but it's not that. Humble means being grounded. After having achieved so much, also one needs to be grounded and being able to pivot if necessary. That is what I call humble, is very, very important. Having the drive to deliver. Of course, it is also the investors' hard-earned money that goes into a deal. So it is the founder's responsibility to multiply that money and show that they are using it wisely. Like, if you remember, in one of our previous discussions, we were discussing that a founder bought a car with the investment money. Similarly, there was a founder who treated cancer with the investors' money. So these kind of behavior or issues with managing money is not acceptable in this area. One needs to be very, very authentic and open. And Dr. Moraine mentioned that some of the things are not opened up earlier when they appoint an investment banker, and later on it comes out in the due diligence. Now, this has happened with me in a case when it was a fintech deal. No one believed in that deal. I believed in that deal. I got them 3 term sheets. Now, when the due diligence happened, there was certain things that were missing. And we pointed out to the founder repeatedly that there are things that are missing and you need to fix those. And if you fix it immediately, the funds will hit your account. But because the founder refused to fix those, the all the funds backed out. So he was at a greater loss. So the thing is that these things do happen, and there are certain things in the due diligence that can be fixed if it's related to accounting, etc. But there are many other things that one needs to be prepared from way before and not at the last minute when you get the term sheet. So I think, I would look in a founder with a humble, apart from the education, of course, and also having the drive to deliver things. What is the kind of technology that they are bringing on the table? And of course, I do look in for educational backgrounds. I do look for IITians, IIMs, MBAs, etc. It's important at some point of time, but
Yeah.
of course, if I also at times look at what are they delivering, even if the education background is not strong, even if they have delivered really well the technology that they are bringing on the table, if it's a food tech, health tech, agri tech. So I think I would really look into those kind of company. And of course, at the later stage, the investor does look at all these things.
I think I completely agree to certain aspects you said, but when it comes to, like you mentioned, obviously IIT, I know it's obviously it's technology, one of the prominent universities in India. I think
Yeah,
somebody is building a tech startup. It does make sense, but I think as obviously on our other sessions we have discussed, we need sales and marketing people as well. As much as we need a CTO, we also
yeah,
need people, right, to sell, to be able to tell the story, right,
yeah.
to the audience, to the market, to their user base, right. The
Hmm.
storytelling is equally very important. So I think there's a mix. That's why the founding team members should be a mix of technical know-how and the sales and the marketing skill set. It's very important to
Yeah,
have that coming together.
balance, because the thing is, I may not be good at finance, I might be good at marketing, and you might be good at finance, or somebody might be good at technology. So we need to have that balance.
Yeah.
Of course, the CEO has to have knowledge of all the areas, but the thing is that having this complementary team really helps in a lot many areas. Somebody might be good in a CFO part of the deal. That's why I always insist that the startup should have a CFO advisor on board always, before they reach out to investors, and have a really good complementary team, like you mentioned. It's really, really important, because how are
Yeah.
you going to sell your product or sell yourself even to the investors if you are not in par with that?
Yes, I totally agree. Especially what I've seen when you are an early stage startup and you are just, started to, make revenues or started to even break even. I think that stage you are still looking for sales and marketing. But once you are ready to talk to investors, like who are going to invest, that's when the CFO becomes very important.
Yeah.
The CFO role when you're looking for VC money or PE money. So that's where the CFO's role becomes very key. So, Dr. Moraine, coming over to you. So you must be also looking at, the attributes of a founding team member, especially when you are going to invest into a company, into a startup, right? It can be early stage startup or a growth stage startup, but still the founding members are the key players to look at. So what do you exactly look at?
It's basically the team, and we are looking at the skill set and it's the experience. So experience can be academia or can be just work experience, so the background. And for companies who are run by a single founder with a very small team, most probably bootstrapped, so early stage investments, uh, it's more on checking how well does the founder recognize where he needs to bring in help via advisors, via employees, or just asking for help. the more major and the more bigger the companies, we are looking into three directions. So one is financial expertise. You don't only need to be able to build a business plan. There are many tools out there, and that's pretty easy, you know. That's kind of your Excel something, and you have your P&L, you have a balance sheet, you have a cash flow projection. The crucial thing is, how do you then follow up, run on forecasting processes, and make sure that you can follow up the financials and initiate corrective actions if required? Because in any startup, things go wrong. So that's been one, the financial expertise. The second is two, that's how well the team can run the go-to-market. So not a tech push, a really go-to-market. How well can the team segment a market in a simple way of segmentation, communicate the value proposition per segment, and from there develop a pitch that is tailored to the problems of the clients. And third, for sure, we want to see a visionary founder who has fire, who is fascinated, and who can show the solution for the problems. Because startups are there to solve problems. So we are not so much interested about a product or a technology. We are interested in understanding what problem are you addressing with your solution or with your solutions. So overall, it's important that the visionary team member or founder has the ability to focus and simplify. You know, you are hearing tons of information, and many founders, and that's happening to all of us, we go in that pitch mode and then talk, can talk more, get lost, talk very inspiring, but train yourself to be focused and imagine that your audience just has no clue about your business and the details, and maybe they also don't have time to listen to that. So it's about focus and simplicity. So what I tell to the founders, you know, your value proposition, the key takeaway, however you want to call it, I need to memorize it tomorrow morning when I wake up. So it needs to be very, very simple. The shorter, the better. That it's in my mind the next morning. It should be the same for your employees. That's also a crucial topic I want to mention, you know, and that's going back to the background checks, you know. If we hear a story and a value proposition, we will for sure talk to everybody in the company and check, do they have a common understanding of what solution they are proposing, or is it a very kind of different way of approaching it? Maybe we can touch that topic a little later.
Thank you so much, Dr. Moraine, for sharing those insights as well. I think passion is very important when it comes to a startup founder. You need a lot of patience. You need a lot of discipline. I totally agree with that. It's not a. I work for a startup, so I know like what it takes. How does every day look like? So it takes a lot of discipline, for sure, as a startup founder. So great. I mean, so these are. So we obviously discussed about the background checks that we need to do when it comes to invest into a enterprise or a startup. So what happens when the money comes in? For example, obviously there are different ways of evaluate a startup, but just let's say a startup got very lucky and they managed to secure their first funding, right? So do you think that's where they stop and this just things become all perfect for them, or do you think that's where the real work starts? Because you have to understand what to do with that money, right? So do you think that two questions? Do you think just getting the first round of funding solves the problems for the startups, or it's just the beginning of another set of responsibilities for them? Vandana?
So very good question, Sunny. There's a lot of responsibility when one gets investments. The reason being, that it is somebody's hard earned money that has gone into the startup because they believe in the founders, they believe in what they are building. Now, once the company gets funded, they do get a lot of support from the investors, a very good marketing team, a technology team. The network gets opened up, and there are a lot more things that they have to do. So, but they have to achieve certain targets, uh, you know, and show that they are able to multiply the money that has been given to them by the investors, because at some point investors will take an exit, and they are also investing the money because they want to make some earnings out of it. There are
Yeah,
no free lunches anywhere. So, I feel that, there's a whole lot of responsibility that goes into it, and one needs to be able to manage the money in the right manner. If the founder is unable to do that, appoint a CFO or somebody who can manage the money and guide you as to how to use it in the right manner, because many times we don't know how to manage the money and we need the help in that, and so that we don't burn it at one go.
yeah,
And of course, the ambition should be, or the goal should be, to go for the next round, Series A, Series B, Series C, Series D, and IPO. I mean, that should be the goal of the company. Then I think they can really do wonders. One should never stop at any stage, and one needs to be unstoppable once they get the investments. It's a big thing that happens to a startup. It's a big achievement that they receive, even if it's a small amount. So I think they need to value that and need
yeah.
to move ahead in the right direction, with a wise thought process, and do things in the proper structured manner.
Very wise words. So, startups founders who are sorry, listening to Vandana and watching our show today, take note of that. Getting the investment is not the end of your problems. That's the start of more responsibilities. Managing that
Yes,
money is the key for you to be to decide your future. Are you going to be a successful? Are you going to be successful doing an exit, or you're going to be, probably burning that, churning that money? And yes, that's the key. Thank you so much. Moving on, Dr. Moraine, over to you.
I think it's all about expectation management, and that needs to be done before the money is transferred to the startup. Why that? Uh, we don't believe in that. It's a good way of working together, just sending the money and then meet each other regularly, quarterly, uh, or yearly, and run into review sessions. That might be an approach we see out in the market. We have a different one. We won't leave our startups alone. It's not at all controlling. It's to set a common path together. So we are defining guidelines. So you can imagine it as the left side, the right side of a motorway, of a highway with several lanes. And then we are also agreeing on milestones. What do we want to achieve? So they don't need to be fully quantifiable. They can also be qualitative. And we are setting very simple set of KPIs. And those KPIs will not change. They might be financially and others. And then things sometimes go differently. They go wrong. It's getting troublesome with certain assumptions we have made together for the business to grow it successfully. So as long as it's in the guidelines, we want you to act accordingly. And on the other hand, if our startups feel like, oh, now we are approaching actually uh, the side of the highway, left or right, then we jump in and actively also help our startups to correct direction. So this is in generally can be done in two ways. Can be done in two ways. One is advisory boards. Advisory boards are like external think tanks. They are not doing the job for you. They are not making any decisions, but they are there to give you advice. Can be a specific topic, let's say a go-to-market, a beach market, opening networks, to do so, or many other things. Also technical expertise, what works, what doesn't work. And on the other hand, some startups might have their investors sitting on their board. So that's the governance board structure. Then they are part of the organization and will be included into decision making. But these are two different ways of doing it. So in generally, we do have advisory board mandates with our investment companies on specific topics. We are meeting in average once a month. It's half a day. It's very regular. After onboarding, we are reviewing the KPIs, we are giving advice, or we are discussing a very specific topic that is dear to the startups. And we're also measuring our own impact, by the way, because it goes two ways, doesn't it?
Rightly said. On that note, it goes two ways. It goes both ways. Absolutely. Thank you so much for sharing those insights. I've got a very, very key question as well, because probably I've had experience in dealing with or being in such a situation, or maybe just put it as a hypothetical situation. So we have a fundraising, looking to raise funds. Then obviously we have LPs, but if it's the first time LP, and probably that person is obviously not sure about the startup world and the VCs, how they operate, but obviously, and he is investing. So is that a guarantee? Because sometimes people are a little worried about you know uh, they don't want to lose the hard-earned money. I mean, obviously the VCs have the money because they are a fund made contributed by financial services, pension funds, but still they, when they're deploying this money on startups or contributing, they also want return, as you already know. But for an individual investor who is jumping into VC world, it's very scary for that investor to understand if he's going to get the returns that he's expecting. So do these investors actually get that ROI? Do you think it's always like a safe haven? Okay, I'm investing. I know there are people who are experienced. They know how to evaluate the startups. They know where they're investing their money. So it's always like okay, I know that I'll be getting my money back. Oh, there are issues where people think that probably I'll be losing my money. Well, have you come across such a situation? Any of you, Vandana?
Yeah, so I mean, it's a risk. When we jump into this industry, one needs to be a risk taker, and only risk takers, achieve a lot. So it's a risk that the investor is also taking on the startup, just like the startup is taking a risk on the investor. It is not always necessary that the investor money, he will make a lot of earnings and he can take an exit. I have seen many investors who are still struggling with the companies and they cannot make an exit because the company has got under losses due to the pandemic or other things that have come up. So I think in that case, the exit doesn't happen and the
Yeah,
investor keeps holding on to that company. But in many cases, exit happens and the investors make a lot of money, double, triple the amount. So it's like equal balance of both. But it's not that always the investor will make earnings. There is a risk.
that's the risk.
And when the investor is putting the money in, he or she is aware of the risk that is going to happen next. So I think, it's not always, bed of roses that one gets to see when investments are happening. There's a lot of work. There's a lot of things that goes behind the scenes. There's a lot of pressure for the investor and the startups, and equally for the investment bankers who are involved in the whole deal making process here.
Yes, there are a lot of risk. I totally agree. So, Dr. Moraine, over to you.
Well, venture capital or private equity is long-term risk capital, and that's what it is about. So the question is, how do you deploy your capital? I think so. You can do direct deals, select the startups yourselves. That's one way, or you run as an LP through funds, or you do co-investment deals or friends and family deals, how they are called, also in the market. So I think the most important thing for investors is to look out to partners who know what are really the problems in the domains they are investing into. Because the more the VC side or family office side understands that market, the better they can identify levels for risk mitigation. And secondly, you just need a large portfolio. Statistics show you need to have a portfolio of 100 companies in average to have one shooting star out of the 100. That's what statistics say. I'm not saying that the other 99 die, but maybe you just need one to drive the fund to a very attractive capital gain. And we are hearing a lot about what's happening in China now with regulation in the internet industry. Regulation is definitely necessary in China, but times are over that it was a pretty simple deal. Everybody has been welcome who had some capital. You throw it in there. There's been a lot of growth and good returns. These times are gone. They are the past. Nevertheless, I believe there are a lot of opportunities, especially in Southeast Asia. It's a very, very interesting region in the world. It's diverse. There's an evolving middle class. There are many, many things that need to be solved. So problems for very daily life that in developed countries we wouldn't even think of it. That if you're living in developing countries, emerging countries, it's affecting your daily life and making it very troublesome. So that's a great spot for startups. Anything about digital ecosystems, and the startups know themselves. You can solve a lot of problems. You have a growing middle class who has the buying power to pay for a subscription model, because you need subscriptions in digital platforms. And it's just coming back to identify a problem you want to solve, and then develop a solution on it and get your right investors for it that can also help you with their business expertise and network. And it's the same story for investors. You have to select your partners.
Great insights. I'm really loving this session, but just wary of the fact that we have two speakers today and we can't obviously go on forever. But hold your thoughts. We're going to be having this episode again because we didn't have the speakers that we're expecting today. But I really love the session. Dr. Moraine, Vandana, thanks a lot for sharing your ideas and insights about this topic on background checks, which is very, very crucial part of the entire fundraising process. Okay, I would like to wrap up the show with some closing thoughts from each of you on this topic. So, Dr. Moraine, let's start with you. What are your closing thoughts before we wrap up the show? I mean, background checks or backgrounds of the startups, obviously, not only startups, but also investors. So let's take some closing thoughts from you.
It's the same for both stakeholders. One, be ready. So get well prepared in advance and be consistent. That's the key to success for your investment journey.
Consistent. Absolutely. Thank you so much. Vandana.
So it's a marriage between the startup and the investors. Of course, if things go wrong, then divorces happen, etc. So one needs to be careful what they choose and pick in these fields, just like you do in the marriages as well. And stay stable, stay strong, and be a risk taker, be wise in your actions and deeds, and I think that will take you a long way. I could be reached out on my LinkedIn handle or my website, www.conmanto.com. And once again, wonderful topic, and thank you for having me here.
Thank you both, Vandana, Dr. Moraine. Where can people find you, Dr. Moraine, before we close the session?
You can see our website here, schweitzer.world. I'm on LinkedIn. Just type my name and you'll find me there. Type my name in Google. Vandana had mentioned that before. It's about being present in the media and being consistent. You'll find me there. On our website, you can go to the venture engine and also pitch your company in in our web form. We'd be very happy to have some pitches in our inbox by tomorrow. And maybe you'll be one of the first ones in our pilot for web-based automated interviews for the investment process. So we're bringing that from the recruiting landscape, where this is getting more common. You don't have to send a CV, answer a lot of boring questions. It's an interactive video interview. You download an app and you answer a couple of questions that pop up. You can train yourself beforehand, and then these videos are shared with our IC investment committee. And this is speeding up the process. It's a lot more fun than running through the more classical interview processes. So pitch your startup. Maybe you have the chance to be one of the first pilot investee companies to run the video interviews.
Isn't that great? Obviously that's cutting short a lot of admin work and a lot of redundant work that gets done. Oh wow, that's awesome. I'm gonna watch out. I'm gonna watch you go and figure out that as well, Dr. Moraine, for sure. This is interesting. I love this. Thank you so much, Vandana and Dr. Moraine. I'm going to have you back, I'm sure, 100% on another episode of VCTV. Thanks for being part of this episode today. It was like all three of ladies today. We had fun. I hope you had equal fun as me, as well, as much as I had. So yes, I'm going to see you again. And till then, keep smiling, take care of yourself, and have a great day. Bye.
Bye-bye.
Thank you. Bye. Take care.